Welcome, traders. Before becoming a member or enrolling in either our 2 semester CIT Certified Index Trader program or just the taking any of the trading setup workshops, we want you to experience what it's like to be in our live trading chat room. So, this is a good video of an actual live trading chat room where you will see how we enter trades, how we protect ourselves with stop losses, how we evaluate market trends and conditions, and decide whether you want to become a member. So let's get to it. The market should be opening in a little bit, and we like to start right before the open and then wait about 6 minutes so we determine the initial reaction. Here's our basic style. Just to tell you about ourselves. We are trend traders and we trade in the direction of the 60-minute charts or 60-minute bars and the daily pivot. We combine these for a trend directional movement. So the idea is to go with the direction, but wait for a little bit of a pullback in that direction. We use strategy and tactics, just like you would if you're playing chess, football, or if you're conducting a war. So if you have a grand strategy, it's nothing without having individual tactics. So we use 6 tactics to execute the strategy. In the trading room, we call these setups. So we have 6 basic setups that we can apply at different times. You'll hear things like the triple T, tardy trader trap, right? The 1030 reversal, the first touch rule, M's and W's, that's one setup, fake out breakout, or the 20 simple moving average off of a momentum cross. A little more complicated. Obviously, when you sign up, we explain those things. So we have basically 2 options. Again, a guided trading room. If you really want to emulate our exact trades, what we're doing in our trades, where we give you the exact entries, what we're risking, stop levels, trailing stop, and targets. That's a different room. Uh, if you have more experience and you just need a running commentary, we have the general membership chat room. We make live running comments during the day, but you're expected to make your own decisions. We can say we're going long. You have to decide where you want to enter, what your personal risk level is, and where you want to take your own targets. Obviously, you can, if you're experienced and you know what you're doing, you could experience our membership really with a reduced cost. If you need more personal advice, obviously we have services available. Finally, for those who are more inclined to be swing type traders, we show you our institutional buying and selling levels. Like this morning, just for the heck of it, we have buying orders in this area with one of our institutional clients buying more than 8,000 contracts. It's good to know if you're buying into support. So we're going to pause. We'll come back on this video as soon as the market starts moving, and you'll be able to get a few minutes with us, maybe 10, 20, 30 minutes with us, see what it's like. We'll do one of these for the next few days, and so you can get a picture of what it's like for a whole week with us. Thanks for your attention, and anytime you have a question, get in touch with us, like this video, share it with your friends, and we'll make more like that. Thank you very much. Good day, traders. We would like to talk about what happens when a setup doesn't work. We have about 6 good setups that have been proven over time to actually help us get amazing returns. I mean, I recently did 304 trades in a row without a loss. You can check up on our site. I put our real broker statements. You could do it with a big account or you could do it with a small account. I chose to clean out all the money and do it in one account so you could see. You could double your money whether you have $1,000 in your account or 50,000 in your account. It doesn't matter. Okay, we want to talk about when trades don't work, they actually become a signal. For example, just before in the room, we were looking, if you look at the chart, today's a down day. We were down, 400 points here, and the market's due for some profit taking. So it had bottomed right in the middle of lunchtime and started up. The market's trying to get to the next resistance level. Anyway, so we're looking for a dip to buy again. Well, let's go back to your own trading. When you take a trade, if this has ever happened to you, immediately you have a loss. Whether you go long or short, imagine yourself taking a trade and instantly it starts moving against you. And it's even better if it's a breakout trade. Imagine a breakout trade, let's say a short. The market breaks support, it goes short, and you go short right at the bottom and it starts going up. That's not a good feeling. Well, that means your short trade didn't work. Well, we have trades that obviously don't work, and we have setups that don't work. So, what we'll look for in this case where the arrow is, right over here, we're looking to go long. Now, this chart is one of the setups we use, the 12 range chart. And what will happen is each bar naturally is 12 ticks. So as soon as one of the edges or extremes of 13 ticks is printed, the next bar will start. Like right now, you're trading this current bar here, right? Current price is 196. Well, you have 12-point range. The previous bar, the high was 44,206. The low was 44,194. So the next bar opened because it was at 193. 12-point range, 12 tick range was broken. So what we're saying is if someone is taking, in this case, a short trade that doesn't work, they're not going to feel too good about that, which means they're losing money. Okay, so try to picture this. We want to take a long trade. So wouldn't it be nice to wait for a short trade that doesn't work? Well, then here on this bar, let's take this bar right here. This is how we called it, and people don't understand it. So here's a bar, it's red. You see that? The high was 44,203. The low was 44,191. Well, the next bar opens at 44,190. Guess where the low was? 190. So if you took that short, immediately the market ran up 12 points. So the moment it went up 13 points, the people on the bottom here who were anticipating a sell signal, obviously, to go down, found out that they were trapped and the market was going up. So we immediately went long, took a profit, and you could see the same thing happen the other way. If you were looking to go in here, if you were looking to go long here, the opposite would have occurred because already the market topped out, right? It had its little run up, ready to top out in a downtrend. Well, here the market gave a buy signal, and immediately those people are stopped out, and you got the market continuing down. So look for known setups that fail and be willing, of course, to protect yourself from the failed trade, initiating a new trade, and that one fails, and then you get out. That's called chop. When a buy signal's followed by a sell signal, followed by another signal, that will indicate chop. So again, what are these? We'll call a new bar a signal. Every bar on a 12 range chart, or if you don't like 12 range, 16 range is pretty good. It'll give you less signals. But we're saying we want a micro scalping tool. There's nothing better, we found, than on the Dow futures than using a 12 range chart that immediately produces another signal. So if you're looking to go long, you would wait until you see buyers, which means in this case, for example, right now, if somebody was shorting, they keep expecting the market to go down. If you have a new bar that's formed above this one, well, then that means the person who went, or group or whatever, who went short at the exact low right now, see, they're down 13 points. Now, whether this produces a further up move or not, no one guarantees it. But I can certainly say the person who went short at that extreme low right there, which was 176, was hoping to see 175, 174, 170, all the way down. All of a sudden, it's moving up 13 points against that person. And now we've got another 12 points. They're already losing money. So imagine if you just went long right above there and start taking profits, move your stop. You got to manage trades well. You're making money. So every bar, every 12 range bar is going to produce a winner and a loser. Think about that, of only 12 points. Now, if you feel that that's too fast, well, then have a 18 or 20 point range bar. That means when someone takes a signal on your system and you see the low of a 20 range bar, all of a sudden printing a new bar above it, that means that person went short and has a 21 point loss immediately. It's those immediate reversals that kill traders. Not necessarily because you lose a lot of money, but because it occurs so suddenly. What it does is it freaks you out. You're so angry to know that you got the worst tick that you just want to stay there. You can't believe it. And usually that small loss becomes a bigger loss and a bigger loss because it's so sudden. It's a reversal. Nobody minds a trade that's sort of meandering. But the moment you see the perfect trade that immediately fails, you know it in your head that you're trapped. But a lot of traders don't want to admit it right away. The good traders know that they're trapped and right away get out. And that's what we want to take advantage of. The trader who doesn't get out, who has to hurt even more. That's your bag of tricks. Add it to your bag of tricks. Hopefully, you'll like us, subscribe to us, and see us in the trading room. Take a trial for a week. You'll be happy you did.